Creating a successful fintech is super tough. I've been fortunate enough to be part of the journey for 2 fintech unicorns, and I've become obsessed with cracking the code. Join me and my guests, all experts in their domain, as we attempt to find the secrets and share them with you. Welcome to the Hive Mind. Welcome to another Hive Mind. This event is going to be a little bit different. We often talk about the things that founders and successful commercial operators do to make their businesses a success. But actually, we often overlook one of the most important things, which is the market in which we operate. Some of those things are really beyond the control of the suppliers that service them. So today I'm going to be talking with Simon Lyons from OB Connect, and we're going to be talking specifically about the open banking industry, which has had a lot of promise, but also had some challenges, and we're going to talk about some of those things today. Simon, thanks very much for joining.
James, thank you very much for having me. It's an absolute pleasure. I've seen the luminaries that you've interviewed as well, and I feel very honoured to be one of them.
Good to have you join. So I think what I'd love to start off with is, I think before we start talking about what's going on in the market, we need to frame open banking for anyone that's not really familiar with it. So could you just start off by explaining a little bit about what open banking is and really why it started?
Back to the history, there's always been connectivity between bank and customers. So I'll give you the one that I use 100 times over, which is, since you've had a bank, they've told you how to connect to them. You've rang them, you've gone to the branch, or you've, in the good old days, you've used an app or a digital channel now. Well, what they all were was they were prescribed by the bank. They were their methods of interaction. What open banking gave us was a way to communicate with banks that joined the regime, which was standardized via something called APIs. Very simply, these are basically websites without pictures, without words. They were just data that comes outside. So we built a new way of engaging with the bank. It came from the CMA, the Competition and Markets Authority, and it was designed to create competition. The CMA, in their wisdom, said that what we need to give consumers better choice. We need to give them more options, and we need to create more competition in the marketplace of banking. The route for that was open banking. There are different nuances around that, the views of that, but what we had was a standardized way of banking. That sounds like mumbo jumbo till we realize what it can do. If we then look at what we can do then is we can start our banking journey anywhere. We can go into our accountancy platform. We can go into third-party platforms such as our mortgage lending one to get our bank statements in there. We can make payments to the tax office. We've allowed to get the bank we want where we want. That for me is the simplest way of what open banking, how it works. If we look at what the outcomes were, they were driven to create competition to give consumers better choice, and they were written down paper outcomes. Did it do that? It's a very difficult conversation, but unfortunately, no, it didn't. What it did create was something far more important, which I'm sure we can expand on later. But essentially, we opened up a new door in the bank. We created a new one that can be accessed by a different way without using the traditional bank channels.
Great. And I think you touched on something really important, which is, I think when it started, it probably had a set of use cases and outcomes that were envisaged. And as with anything that's not proven, when technologies and systems come into contact with reality, unexpected things happen. So how do you think those initial use cases compare to how open banking is being utilized now? And, again, come back with the lens of the value it's giving. Do you think it's delivering on the value now?
I think the values it set out to, I think there was this view there was going to be a lot of fintechs out there would create these products and you and I would use them and we would stop using our banking apps and we would use ways of sharing our data as well. And it is a halcyon dream. The problem you've got is that we take very few chances with our money. If you gave me your mobile phone, you'd probably show me your CCTV, you'd probably show me a picture on Facebook, or I'm old, you're younger than me, so you might show me Instagram or some other wonderful channel to go do with it. But if I asked you to show me your banking app, you wouldn't. You 100% wouldn't. If your salary was paid a day late, you wouldn't. You'd be complaining about it. So there wasn't this vanguard nature in the market for these products to be adopted, and much more important, to be monetized. Banking is free in the UK. You can have a current account for free from a range of providers. So free is a difficult place to go from commercially. What it did do that I don't think anybody expected, and the proof in the pudding is in the adoption in everything these cases, there are now very, very few manual connections to accountancy platforms. So for the 6 million SMEs we've got in this country, one of their biggest challenges was bookkeeping. Putting your envelope and your shoebox to your accountant with all your receipts and sending your information off was a very onerous, difficult task. Open banking revolutionised it. I think the company's called OpenWorks that connected to Sage and Xero and QuickBooks, and the uptake was just ridiculous. And the amount of customers that actually consume open banking data to use for their bookkeeping is high, to the point now whereby accountants will say to a customer, well, you're with that bank, that's great, but if you use this one, we can get all your data automatically and it's going to be really easy. So if we go back to the original comment that it was to make competition in the marketplace, it might have done exactly the opposite in that case, because if your bookkeeping's easy, the thought of saving £5 a month to move banks, or £10 a month, or even £40 a month isn't really there. So in the small business arena, what you basically gave, James, was you gave a great deal of automation at a standardized level. Proof: a lot of the banks have got rid of their legacy connectivity to places like Sage and to places like Xero and QuickBooks, and they do a wonderful job of doing it. I think if we look on the flip side of the coin, the idea was there was going to be person-to-person payments, that I was going to have this whole new way of paying you, a Venmo, a PayPal, whatever product you want to call it as well. And we thought it was going to be a retail revolution. And this is actually the crux of the focus of open banking. It wasn't. But if we look at the volume and the value of payments that have gone from business to person, B2C or B2B, it's just staggering. We've got good friends at Token, Todd Clyde over there as well. They've pretty much mopped up the entire credit card payoff market. Done a brilliant job of doing it as well. HMRC worked with EcoSpend to go and pick up tax payments as well. I got the email before we spoke today. There's £39.5 billion worth of tax payments made. But if you don't mind, I'll extrapolate a little bit. The UK government doesn't lose, but people pay the wrong reference to them every year using open banking. They make mistakes. So we have billions of pounds that can't be spent by Treasury, and we've heard about our £22 billion black hole by the Chancellor. Of those £39.5 billion, they're all perfect. Every single solitary penny has been apportioned. So we keep focusing on the price and about, we're going to compete with Visa and Mastercard. Actually, that's not the benefit. The benefit is accuracy. So even those three use cases in their simple minds, none of them would have been written down by the CMA, but it's not their fault. It absolutely isn't their fault. Now, what is their fault, or what is somebody's fault somewhere, I'm not quite sure who it is this. It was a corporate initiative. It was adopted and distributed by big corporates, and that's where the focus should be. I think I'm very lucky because I spent about 20 years of my life as a corporate banker. So when open banking came along, we've been doing it manually for years with great customers like MBNA and Norwich and Peter and Bradford and Bingley and Northern Rock and all this connectivity. And I looked at it and went, whoa, this is a corporate banking revolution. So I hope that's some useful anecdotes or vox pops for you for what the usability is and what the value is.
Yeah, what I particularly like about that is, I mean, I started by saying these tectonic forces, and one of them is the value that the end user receives the same as the one that they think they're going to, and is it going to be perceived as enough value to drive changes in their behaviors? And you said something very interesting at the beginning, which is, we made open banking live, particularly the account aggregation stuff, and we expected everyone to go woohoo and change their bank, or be disintermediated. And it's a little bit like the fast switching on the accounts that was designed to increase competition, but actually the adoption there has been incredibly low. And on the payments thing, it was interesting. I was at Pay 360 last week, and one of the discussions was around payments, and actually, is it solving a problem from a consumer pays perspective? Yeah, a lot of the time it drops the cost of sending the payment, but that's in the merchant's interest. From the perspective of the buyer, actually, it's not as frictionless as, well, I've got my Apple Pay, zap. So we're not going to see the adoption. But on the other hand, there are these wonderful use cases that have popped up, and confirmation of payee, complete game changer from a fraud perspective. One of my favorite ones is actually using the data to do for credit checking, to check people's live liquidity.
Revolution.
So there have been some incredible things to come out of it, but I would say quite significantly different from the initial hypothesis.
You could set me off now on about a 2-hour conversation. So let me just pick up a couple of things. The credit industry is, one of the biggest in the world. Banks lend. Let's not kid ourselves. In the payment industry, we have a wonderful time, and it's a great place to be because it's very technology-driven. Lending is pretty much the same as it was for the Medicis in the 15th century, when they sat on their bridge in Italy and they went and did it in Venice. I think they were Venice traders. We've always relied on historical information to create credit. So when you go and do your credit check, it tells you what you've missed. It doesn't actually give you a proactive view, and I'm being a bit generalist now. So for those, the credit scorers out there, hopefully they're listening as well. Open banking would give you a bank account based credit score. Now, for me, that is the most important aspect of this. I'm ex-Co-op bank, used to bank charities and vulnerable adults as well. I was immensely proud of it. And it's probably some of the best work I've ever done as well to create what you were doing for people who are disadvantaged. The fact that a bank account can create a profile and a score is unbelievable. Evidence is really, really important. If we look at one of the most important purchases of an open banking company, one of the only purchases, it's Credit Kudos, and they were bought by Apple.
I was going to say that, yeah.
And everybody said, "Oh my goodness me, Apple are going to go into banking. The big tech's going to go and open a bank." They're not. What they're going to do is they've just created ubiquity to be able to find out the affordability of every one of their customers if they share the bank data, and they're going to put it in the wallet. So the biggest step forward for open banking, there were two. The first one was HMRC using its tax data. That was credibility for me. That was huge. And the second one was Apple. And it's been a quiet revolution. I believe, but I'm not certain, it's now the biggest use of AIS data in the UK. So if you have an Apple iPhone, you can see your bank balance before you use your debit card. If you're a fan of economics, Taylor's nudge. I'm looking at my bank balance before I use my debit card. What brilliance. And so what that leads on to me is I look forward to the day that somebody creates a standard or a BSI or an ISO credit score rating, which is based on bank account behavior. And for me there, you have absolutely nailed what would be a benefit from banking, which would open banking that nobody foresaw. Yes, it was considered that you could use it, but forgive me and forgive my playing down of this now. The only reason that works is because it's hard to get people a bank statement. That's what we've done. We've simply fixed getting a bank statement more efficiently. So expand income and expenditure reports for people in debt, accurate assessment for people who have got an exposure. And then we're looking at what the days are that people have got. We can get seasonal capability for people to pay weekly, daily, hourly. So if somebody's on benefits and they get paid a benefit on a Tuesday, I think our own tax office will be doing it. Well, I want to take £12 on a Tuesday and £6 on a Friday. The traditional payment methods, apart from repetitive card, doesn't allow to do that as well. So we've built a whole new range of flexibility in there. We're indoctrinated to our bills monthly. Why? And open banking did that, but that wasn't on the tin. But it's not fair to expect them to have that on the tin because it wasn't written down unless you worked in the lending space, and open banking wasn't delivered by lending bankers.
Mm-hmm. So, we've seen a lot of open banking providers come into the fray, and I think one of the things that you and I have exchanged comments about in the past is the finding an equilibrium between supply and demand. And what do you think the impact has been of having so many open banking providers?
At the end of the day, they were all born in a low interest rate environment, and I think that was a bad thing, because it was relatively easy to raise funding on a pipe dream, and any good VC will sit there and say, "What are you going to do? We're going to replace Visa." That should never have been allowed. There really should have been better sense checking on that as well. I will be at the dismay of my peers now, and I'll probably be hounded from the building. Open Banking Expo in October as well and stuff, but I don't ever foresee open banking paying for a Costa or a Starbucks because simply the contactless card is just so fast and so good, and the performance of open banking, it doesn't give that certainty that the authorization code does in cards. So if you sit down and say you're going to replace Visa and Mastercard, you will get certain VCs that will prick their ears up and go, "Oh my God, that's a £376 billion market. They only need to get 1% of the market, and we've got 500-fold payback." I thought it was complete madness, to be quite honest with you. I didn't think there was any potential of face-to-face transactions being adopted at that rate. And also the costs that they had to get to go and compete in that marketplace. There was a huge miss. I mean, James, I refer to a lot of your comments about enterprise commercial approaches, and the way that you actually engage with customers and the way that you talk to them as well. It is the big staring ball. Everybody walks in the door to a British Telecom or a British Gas or to a Northern, whatever the big utilities with high volume, the Pets at Home, Pet Protect, and they said, I can save you 1p a transaction. But they failed to realise that they need to spend just over £5 million to change the back end. That cards and direct debit credit in bulk, but open banking in principle credits as single transactions. It uses the faster payment rails. So they're not saving them money, they're actually making them spend money. What they didn't focus on was the benefits of accuracy. I think the settlement one is not that big a deal when you've got companies turning over a couple of billion a year as well. But I felt the approach to market was very, very poor. Very, very poor indeed. I can kind of prove that if we look now at, got to be very careful now what I say, I think. A balance sheet never lies and a P&L doesn't lie. If we look at the growth of those companies, I mean, it is 1/100th of what they probably promised their investors. Maybe 1/50th, 1/20th as well. But my big frustration is that open banking is a truly brilliant initiative. It shouldn't have been called open, and it shouldn't have been used as a direct tool to replace Visa and Mastercard, which was the role of PSD2. Its positioning should have been that it's going to give you, the corporate, the ability to build a stronger relationship with your end customer and to do much more with them that traditionally you couldn't do, or you were using penal and high-risk payment methods for.
Mm-hmm. Yeah, I mean, there's a couple of things I'd love to get your opinion on, and I'll start by saying what I'm seeing. I think there are two forces that I think have depressed the success of some of the open banking providers. One has been the sheer amount of supply. So it constrains margins because everyone's fighting over a market that hasn't actually grown to a size that is, really, really valuable yet. Nascent, lots of promise, but that competition has depressed pricing. And also one of the dynamics of selling to big banks is that they can only do 10% of the things that they want to do. So the only way that a bank will make a technology investment is if they're told that they absolutely have to, or if it delivers in the top 10% of all business cases. And I think some of the initial open banking use cases that we talked about, like the AISP and, see all of your accounts in one space, that was always a nice to have. It didn't, no one could demonstrably prove that, if you gave someone access to all of their accounts in a single view, that would help them acquire 10% more customers per year. It was very difficult to put your finger on exactly what the return on that business case is, and that didn't help the business achieve premiums. As you say, some of these other use cases are far more positive, like confirmation of payee or credit checking. You can draw a straight line in the business case there, and I think that's really, really great. So, but it's just a question of, it took a little bit of time for those cases to develop and then mature.
You do, and it's kind of anecdotal as an answer. I completely agree with you. Fortunately, open banking, they thought it was going to be fintechs that deliver it. It's not. There's the odd one that will do well, that'll do with it. But unless what you need is a huge brand to go through the door with as well. So, put the names. We work with PayPal. It took a chunk out. They provide 90% of services to utility industry. They're a huge PLC that turn over 450 million a year, a big chunk of profit, and they're credible. And they've also got products. It was weak in isolation, was open banking, but it was incredibly powerful in aggregation. So if you add what you just said, an AISP check, to a customer that's on a smart meter, my goodness me, we've just done something amazing. We can actually then look to that customer's affordability and give them products that are built around it. If we look at PISP as a payment method that could replace direct debit, and we're solving poverty tariffs at energy levels, because what we're doing is we're giving people a regular way to pay, so they're getting the benefit of direct debit without the direct debit commitment, which a lot of customers don't want to do as well. But what happened was, it was just, we can save you 2p a transaction. It's just the wrong message. I mean, look, James, you talk all the time about enterprise sales, and you're one of the few people that I've spoken to and engaged with as well who genuinely understands what the correct way is to approach a big, chunky, tectonic, slow, iceberg level PLC in corporate. And you know what the touch points are, you know what the benefits are. These guys hit what you fight against as well. It's kind of a shame, really, that there weren't more people like you inside some of the open banking companies and inside them to go and approach the market. Because what's happened inadvertently is this, and God forbid if this happens, if a couple of them go down, they're going to damage the name of open banking. And then as soon as you say that to a procurement person, they're going to go, we don't want that open banking because that's high risk. And what we've immediately done then is we've got a self-fulfilling prophecy, which we just go to the big boys and the big girls, and we end up with a huge brand name, and it defeats the whole object of what actually the initiative was there for. Sadly, I think that's true. Now, there is another incredibly important point which I think is missed. Isolating open banking in fintechs was a huge error because customers don't want one service. I can't think of one corporate that procures something in isolation from either payments or banking. They're generally bundled into two separate bodies, unless they're going to make a specific initiative, unless there's a very, very high benefits case for them. And as you correctly say, what's the benefits case? What's the thing that's going to make me buy it? If it's just going to save me 1 pence on debit card transactions, and I've already got that in a bundle, and I can wait for WorldPay or Global Pay or Elevon to go and give me that for me because I'm already integrated with them. I've already got it with them as well. So they sort of move products from side to side. I think we're heading to a point where, and I've seen a few of them as well, unless a provider goes out and actually aggregates open banking and confirmation of payee at the details checking level and AASP for fraud prevention, for account checking, for credible checking in one big bundle with other providers, I think there's a lot going to fall by the wayside. But I'm going to prove this by something as well. There are tenders out there now for open banking where the providers are bidding zero. That's economically, it's really easy. There's a million case studies through the last 300 years. If you go out at zero, you destroy your market. You cannot land grab and then go from zero up because there's somebody else always wishing to get zero as well. So it does rather, I hope, credentialise what I say as well. But we maybe would have been easier if we just would have started out and said to create a trust mark and say, right, okay, there's 9 banks are going to adopt open banking, but also Competition and Markets Authority. Can you please name 10 corporates that have to adopt it? That might help a bit, but hindsight's a great skill, isn't it?
2020. You talked about an interesting thing there, which is the unit economics, which are destroying it, and the zero interest era is guilty of that. And I don't
Absolutely.
blame venture capital directly because they do their thing. They respond reactively to the market forces. But the truth is, a load of companies that don't have to be profitable racing to the bottom on price and then entering a new environment like we are now. I think significant numbers of failures are unavoidable. And although you kind of painted quite a dark picture of that, the consequences of that potentially impacting open banking, I'm actually a little bit more positive. I think that rebalancing is going to be necessary. There's going to be blood on the dance floor, but I think it will those vendors that remain will be able to slowly over time push up their pricing, and the industry will move to a point where it is viable. And although open banking isn't quite in the same place in America, account aggregation has actually been there for longer, and they are far more profitable. They drive more revenue, and I think that is what we will start to see in the UK and Europe. At least I'm very hopeful that that is the case, because open banking is an exceptional opportunity, but it just can't survive as it has been.
It's in a free environment. I mean, if you get to the number one, sorry, I don't mean to sound positive. I'm probably the biggest supporter of open banking on the planet. We see
Mm,
growth of it in areas which are just unbelievable, but they're all corporates adopting it. They're not personal. The biggest fundamental problem is that the current account is free in the UK. And as you said before, the consumer doesn't pay for their payments. They just have an experience. And what they want is they want to know that who am I dealing with, I think, is the first question, not how do I pay. That's the
mm.
other thing for me. There seems to be a big noise. I mean, America, JJ Henry, the huge aggregator that aggregate, 6,000 banks? But every American pays for their banking, and they have a culture where they expect to pay a transactional fee. And then, to be honest with you, quite a high fee for services. And they see They don't see the standards that we have here, which is the breadth of it. The UK is arguably maybe not the best market to conduct open banking in, because the consumer isn't prepared to pay for it, and it is a race to the bottom for unit rates. Where will it go when it finishes? Yes, when the blood on the dance floor, as you say, when the wheat separates from the chaff and the market matures, I think there's two things will happen as well. I think we actually don't need to know what open banking is. So when the HMRC launched it, I think Mel said this last week on a panel, they put open banking in brackets above pay by bank. And they received multiple calls saying it's fraud. What is this? What is this? They removed it and got none. None. There was not one piece of feedback to go through this. So I also think this idea that we need to educate consumers, I really, it's poppycock. I don't think it's a good idea at all, because the consumer doesn't know what 3DS is, or an EMV card, or the difference in chip and pin, or
Yeah, what do
level
they
one,
get
level
out
two,
of
level
it?
three. They don't. They don't know what chaps or a backs payment is, even though they can't make a backs payment anymore for individual ones. They just want the experience. But I
But you
think
know
what's
what?
going to happen.
This is a similar thing. A lot of the themes that we are talking about here are not unique to open
No, they're
banking.
not.
And another example that I can give is embedded finance. Again, it's another example
Absolutely.
with with the industry being obsessed with using jargon and going out and trying to say we need to educate everyone on embedded finance. No one wants to know what embedded finance is. They care about the use case, not
Completely
the
agree.
internal vernacular.
It go further though. Let's say open finance. So I mean, it's like sort of. So what I want to say is, I'm going to say to the energy companies, the telco companies, and the insurance companies. Okay, you're all one category now. Why would you do that? Why would you sit there and say that we're not going to have a specialist offering that works for insurance companies got a completely different need? Why would we not say that, the Ofgem rules that work around sharing of data, and they've got loads of devices in the networks? I don't understand why it's central government and the banking industry insist on putting loads of things together. It's as though they're saying, I don't understand it, let's put it all in one box. Because if I was head of Ofgem, or I was head of Ofwat, or I was head of Oftel, I'd be sitting there saying, we're not open finance. We're going to do our own thing, because we've got hundreds of millions of customers, or tens of millions of customers that use us as well and stuff. There's an obsession with doing that, and I think it's detrimental. I do believe that one of the gaps that we've had is that we've used the words like innovation in payments, and I think that's a very, very dangerous word, because if I'm a procurement person or a risk officer or an accountant at British Gas, and I hear those three words, I don't want innovation. I want safe first, I want secure, and I want trusted and proven. Somebody else can go and take the risks. I'm not going to go and do it as well. So maybe the dialogue has worked the wrong way around as well. I mean, look, it sounds like a bleak picture, but it's not. There is hundreds of billions of pounds worth of payments gone through open banking. From a personal perspective, we've seen unbelievable growth in smart meter payments working with PayPoint. Confirmation of payee is, for me, one of the most powerful fraud tools outside of the bank I've ever seen. I think if that was augmented with things like telephone numbers, and there's a really important principle under there as well. The role of the API is not as a product, and the role of open banking is not as a product. We shouldn't decide what it does. What we should do is give it to the audience and make sure we know who's who in the zoo. Who's in the room is more important than actually what we do with it. And what's open banking's proven is we gave it all these fintechs, OpenWorks and Credit Kudos and OB Connect being good examples, and we did things with it that weren't on the menu. And those things were very, very, very high benefit. But maybe they weren't what the original plan was as well. Well, it seems that people that stuck to the original plan, it didn't go too well. But I know one thing, we don't need to spend hundreds of millions of pounds to change the product. We can allow the market to do that, because we've got one API from a bank, one API from a telco, one API from a water company. Suddenly, James, I could sit in front of you and say, hey, you rang your water company 3 times, but you might have been frauded. It wasn't the water company, and they tried to make a payment at that date, and I've stopped it. Isn't that wonderful? We can bring data together, which we've never been able to do before. Banking's always been isolated. Open banking enabled it. But yeah, to your point, the benefits are there. They just weren't on the original menu.
Mm-hmm. Yeah. One thing I'd like to explore is the role of sales in open banking,
Go on.
because um, my history is enterprise sales, by which I mean large ticket items, 6, 7, 8 figures. And one of the things that we've seen with open banking that I believe has exacerbated the challenges that the suppliers have faced is the cost. Like, the cost to sell to regulated industries is high, because they need that white glove service.
Yep.
They're going to drive you through RFPs, POCs, all of those things. The business is not the industry is not very good at self-serving. And that has a distinct incompatibility with selling something that is inexpensive. Now, obviously, if Barclays or HSBC or one of the big banks implements open banking, it is going to be a large item. But actually, the smaller organizations, the revenue does not match up to the go-to-market motion in its current form. I don't know what you think about that.
So you've done it. You've got the T-shirt. I'm fortunate enough to say that I've done a fair bit of it as well. Dealing with the big enterprise customer is completely different. The focal point on just the price that does it, it is a poor one, because there's a lot of other things to go and do as well. There was a level of education that was needed for corporates to understand what their benefits case is going to be, and they were drifted towards the price point as well. So again, speaking amongst friends, a bid of a tender where somebody bids zero and then offers a six-figure incentive to that business to choose them. No procurement company has a method of scoring that, because they've just scored 100% on the price and it's completely skewed the process. And what it does in some cases is it actually stops the corporate buying. If there's one thing I could change in open banking, there was a desire to educate the consumer. But what there should have been was a desire to educate the corporate about what it is and about what the benefits cases are. So when they did do a procurement exercise, A, they were asking the right questions, and B, they were understanding the bodies they were dealing with. And forgive me, I brought my own soapbox and trumpet. When the HMRC went out to tender, I wrote a lot of the questions they should ask their suppliers. And I also gave them an overview of the balance sheet of the suppliers and what they were going to look like financially. I didn't see the suppliers. There was actually, it's on public record, there's a freedom of information request asking all the questions I gave them and all the information I gave to HMRC when I was working at open banking, which was a little bit hurtful. But the whole point I made was that it would be a disaster if HMRC went and picked a supplier based on security and resilience. So I wanted them to have the right questions to ask a supplier to be able to make a really good assessment. And thankfully they did. They chose EcoSpend, they renewed with them, a fine company, nice people, and they've done a really good service with them as well. Price was one point, but there was lots of other things. The mistake made then was that the market decided that it was going to buy prices as well. And I don't know how it comes back, James. I don't know what the answer is, because when somebody started bidding zero, if you were a salesman, you were going in to compete against that, and you've done it. How would you fight it? Because I tell you what, I don't know what the answer is to that. If I'm going in at 2p and somebody else is going in at zero, what's the answer?
Yeah, I mean, relying on the buyer to realize that it's destructive and not buy something that's ostensibly appears as a bargain, I just, you can't put that in the buyer's lap. I mean, one of the things that occurred to me, and this is not just true for open banking, but I think actually is an emerging trend within how financial services buy. If you want to buy cheap technology, you need to find some way to remove the cost from it
That's
so
a
that it can
sale.
support and the cost of sale is a significant part of that. And
Look,
here's a sandbox, here's the API documentation. Call us when you're ready to place an order.
problem you've got there is there's somebody that does it now on a daily basis. So as a business, we've got SOC 2. I think we've got three of the pillars in there. We've got ISO 27001. We're FCA regulated. We've got to produce our accounts. We're now pseudo part of a PLC as well. And then you go to procurement and you have a group of people, and I'm not going to criticise them. Their job is to make sure that the business chooses the correct supplier. But when one business is turning over, let's say, for example, £1 million a year, which a lot of the open bank providers aren't, and one is turning over 2.9 billion, which, sorry, 120 million, a bottom line would walk through the door as well. How can you possibly be a level playing field? We've got one bank, three different countries. They use the same platform for procurement, and the questions in the procurement platform are all different for cybersecurity. So there's a lot of problems here with Trustmark, with certifying suppliers, that when you've got a certain number of attestations and a certain number of credentials, why can't you be waved through 3, 4, 5 sessions? Because if I could change one thing, it would be filling in questionnaires. That's the only thing. And the questionnaires are so difficult. Where do you store your data? Well, if we're making payments, we don't. consent is a huge argument in open banking, but this is where the corporate argument of education comes back in again as well. And I actually think the education point was at the procurement level. I struggle with it. There's no point in me saying I'm not. In the good old days, I would have found my senior sponsors and seen what we need to do, seen, what can we do here? What's the best way to present the procurement information? Those days are long gone since 2009. Product Governance Forum, the regulations we've got in the UK now about buying as well, competition and bribery laws, which I'm not suggesting should be breached, but I am suggesting the process is not made for a fintech. There's a lady that runs. Oh, she's going to kill me if I not remember it. Can't remember her name. She runs sort of a pre-attestation service for banks, and it's not about the company; it's about the principle. But I think that if open banking would have said, under the FCA banner, you are going to get this certificate and work to create that. So when you went to BT, they could look at BT and say, you can rely on this for this, and then they would have paid for an amount of insurance for them as well. That would have gone a long, 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 long way to helping it as well. And I do believe that one of the biggest reasons why open banking has not grown as much as it should, and I'll just say this, shall I, is because of procurement processes. And I don't think they gave up to deal with them.
Yeah,
Probably a negative comment, really.
No, it's not. I mean, because if you want to move an industry forward, you need to look at the things that are putting friction. So I don't take it as negative at all, because if we can't find some way to address those, it will continue to not grow in the way that both you and I know it can.
It's quite sad, really, isn't it? It's quite a deflating comment, and it's not blamed personally as well, but it's just two pieces of a jigsaw, isn't it? You've got to be ready to know what you're dealing with, and until you've been through the maelstrom, challenges, complexity of a procurement process at a big one, tier one supplier level, my God, it's hard.
So, as we move towards a close, I'm going to ask you to gaze inside Simon Lyon's crystal ball on a couple of issues. We talked about the challenges that a number of suppliers are facing. Are we going to see significant numbers of failures in the vendor landscape?
I think, we just look at the economic environment. We've had a contraction in limited company numbers. I think it was in January, first time ever. I think it's in history. So you've got to look at that for the rest of the industry, what the economic conditions we're in. The margins are low, the revenues are low, cost of service is pretty high. We have seen quite a lot already that have gently faded away or been aggregated into others. But I think unless you've got a broader proposition than just plain old open banking, or you specialise in your sector for a specific part of industry, which I'm a big fan of, I think we're going to see very general suppliers, but several of them fall away. Then again, how many e-money providers fall away every year? How many merchant acquirers get set up and disappear? How many card issuers get set up and disappear every year? So maybe we're just following the pattern of people trying to get into the Garden of Adam and Eve.
Now, again, I am asking you to prognosticate, but do you think they will be outright failures or acquired? Because, I mean, we talked about the strategic value of open banking, which I do believe is significant, but currently right now, significant margin pressure. Like, I think if some of those vendors that are struggling to survive got scooped up by larger multinationals, they could be great strategic acquisitions and quite high value. And yes, innovation will suffer inside a big business, but would that be positive?
Yeah, I mean, look, make it really easy. The winner in open banking is the corporate, financially. So if you have corporate X, which is a big insurance company, which is using open banking supplier Y, which they're paying £5,000 a year for the service, but they're receiving £18 million worth of benefits, which in some cases is extremely low. There's a lot bigger numbers than that. If one's going to go under and you can pick it up for £4 million, why wouldn't you? I mean, I think we've talked about this, and I think you're exactly right about the way they approach. But the secondary market sale now, where I have a supplier that is potentially failing, I want to de-risk them, 2P them, take them back to a bare bones operation, and that will save my cost of change to a new supplier. It's probably actually a net for net purchase, but I think 90% of the ones with customers on board will be absorbed without a doubt.
Yeah.
And I think it'd be very quiet, and I sincerely hope it is very quiet.
But for the sake of the industry, you mean just
I
the
do, yeah. I
optics
mean,
on it?
I really don't want. I really don't want a big name failure. It's not good for any of us. And we both know there's been administrative changes recently at a lot of the businesses we look at as well, and I take those very seriously, because you don't make those changes unless they've got an impact as well. I'm really lucky. I'm one of the stable ones because we're part of a big group and we're doing really well. We're really, really lucky. But yeah, I don't want them to go because I'm a massive supporter of it.
Yeah. Simon, thank you very much for your time.
James, thank you, and please put in as well and stuff that it would have been good if we'd have done this 4 years ago, and we could have come up with a theory about. It would have been a great book to say open banking, how to go to market. Because if I can compliment you, sir, you're the only person I know that sat down and said some of the things that I violently agree with on a daily basis. So thank you for having me. I'm very flattered.
Thank you.